Hi and welcome to the Market Alert for Wednesday the 3rd of May 2023. So yesterday saw bonds and bullion burst higher, banks battered as the JOLTS data plunged ahead of Powell's statement later this evening. We're going to need a bigger boat. It all turned ugly yesterday after the release of the JOLTS data there. Risk off as regional banks slide while JOLTS data falls ahead of Fed. And same sentiment here. US stocks declined on the eve of the FOMC amid regional bank losses. And also Australia increased their rates by a quarter of 1% yesterday as well, 25 basis points out of the blue, which also added to the downside pressure that we saw yesterday afternoon. So let's have a look at this, and we'll kick off with the Dow, work our way through to the metals as we normally do. So yesterday, as you can see in the Dow, the market moving down sharply, and overnight the market trying to move back to the upside there. Just hesitating there because I'm just going to remove this. I just wanted to draw this in for you so you can see how far the market came back. You can see that confluence there of 78% in the 50 EMA, and then the market bouncing before the close, which is why if we go from there to there, I had these numbers on the upside. So at the moment the market stopping at the 38% retracement. You'll notice that at the 50 and the 62 we also have a couple of averages there as well, offering resistance in the daily chart. So keep an eye on these if you trade the Dow. 30-minute chart, we traded in a range of just 100 points. The market didn't really do it. Actually, it's 150 points there from the high down to the low. And then we had the JOLTS, and then the market just fell out of bed, as you can see here at one point during this move down to the low. We dropped 570 points, and then the market bounced after finding support, which you can see there. Now it's trading back at the DP there. Nowhere near yesterday's low at the moment, and it's probably going to see or wait for Powell to make a decision later this evening. So you might get a bit of activity this morning, but after lunch I'll be very surprised if we see much of a move unless something else comes out of the blue, another central bank raising rates, etc. But otherwise the market is going to be treading water this afternoon, waiting for Powell's statement to see what he's going to do, whether he's going to pivot or increase rates by that quarter of 1%. So let's just have a look at that. In the economic data, we are looking there at 7 p.m. going from 5% to 5.25%. So 5.25%, 25 basis points is what we're looking at for the Fed later. Anything else? ADP numbers, we've got those, and then we've got ISM as well, which is showing a slight increase in the forecast there. See what happens there as well. In the implied volatility, well, we shot up yesterday, went from 1282 to 1437. So a bit of a spike up there for the implied volatility. As I've mentioned before, we're already down in those lows where we can expect a correction. This market is stuck, as you can see. This is the Dow. It's been stuck in this range where it's been hitting these highs and failing to move higher. So maybe the correction is en route, whether it's via Powell or the regional banks. In the German DAX, this down yesterday as well. A lot of selling around yesterday. The day before also there was some selling, despite the fact that they managed to rally the market back. We're below the two averages currently on the overnight. So let's have a look at a bit more detail. Futures yesterday sideways. We sprang up on the cash, then we sailed to the downside, and then we found resistance at the BRN and the averages, and then the market moved lower. There was a bit of support at the 200 MA, and then all of a sudden the JOLTS came out and down we went, as can be seen there. We started to find a bit of support at Monday's low. The area of support came in at 15,700, as can be seen there, and also this is the new low for today if the market moves lower, to keep an eye on. We've got a bounce back there. Let's just have a look at the numbers, see how much the market dropped on the news as well. Not as much as the Dow, 152 points, which is still a decent move, But overall for the day, we see the market down there at 303, which is a bit of an increase, which we've not seen for a while as the volatility has dropped off. So in the 5-minute chart, overnight, we can see the market's back above the close. You can see how it's bounced off this area several times, trying to keep the market on the upside. Yesterday, you'll see the sell-off there following the JOLTS, and also first thing in the morning as the market moved up, found resistance at this BRN here, which is going to be the 16,000 level. 16,000 became a resistance. The market was then hammered back 150 points. It then found support and kept bouncing off the averages to the downside, confirming the weakness there. And as can be seen here as well, with a retracement, we then saw the market sell off. Like I say, evening and overnight, the market now is finding support there and just trying to stay above the 200 MA. And in the S&P, also mirroring the Dow, market down, sitting at 78% retracement, well, between 62 and 78 there. And you've got the 50 EMA bouncing back off it. And again, if we do the same thing here, back to the upside, you will see that we have that confluence of averages with the fib retracement areas, giving that bit of double resistance if prices are to move back to the upside. In the 30-minute S&P, everything was fine. The market was holding at Monday's low until we had the JOLTS. This sent the market south, along with the Aussies increasing interest rates. And you can see there we had support coming in, cluster of volume, and then the market making its way back. But overnight, struggling at the DP. You've got the two averages above there. They need to be taken out. The downside support will be the 20 bar moving average close, and also the low if the market can hold there. In the FTSE, you can see yesterday down sharply to the 50 EMA, and in between the 50 and 62% retracement. Overnight, prices have managed to bounce back above this. But again, on the upside, we will have, if we go from the high to here, you will see that we've got those 50 and 38% retracement tying in with those averages there. In the 30-minute chart, we were a bit of a move to the upside, nothing great. Then it became really quiet until the US opened, and then we saw the sell-off with the JOLTS. And overnight, we're seeing the market finding support at the close. But on the upside, we've got the DP and the 50 EMA, the 200 MA, BRN, and the R1 before we get anywhere near yesterday's high. The low is a lot closer on the downside, and it's important that we hold this if the market is to continue to move to the upside. In the currencies, GBP, JPY down on yesterday. You can see there, and also heading down towards 38% retracement. In the 30 minutes, you can see we started off, we retraced 100% at Monday's high and the R1. And then we saw prices moving lower there and then selling off with the JOLTS as the dollar traded lower as well. And then you can see currently we're at yesterday's low, with the market finding a bit of support, maybe temporary, at the 200 MA there and just below the low. In the pound, bit of support coming in overnight despite the weakness during yesterday. And you can see there's a bit of demand there, but stuck in that sideways range, but still trending to the upside, as can be seen there. There is a defined trend to the upside. In the 30 minutes, again, we've got that sell-off in the morning. We tried to sell off a bit earlier, failed. We traded up to the DP, and then we were hit with the selling there. Got below the close, the 200 MA and the averages, and then we sent the market lower. We tried to get back above the low, but then came under pressure as well. JOLTS moving the market higher as the dollar moved lower, and there you can see support there above the DP and close of yesterday, which is a bullish indication. You need to take out the 200, the BRN and the high to advance the pound back to the upside. In the US dollar, we can see this down yesterday, and also overnight we have some weakness as well, already in advance of Powell speaking later today. Again, we're still above that 101 level, which needs to be taken out on the downside. You'll see if it does, then there'll be an acceleration to the downside of the US dollar index there. And finally, in the metals, silver managing to rally once more yesterday. Very surprised to see this happening. Coming off that 89% retracement, you can see there a bit of supply around in the market, people selling into this as it moved higher. Again, this is all certainly moving to the downside to begin with, down to the S1, and then the JOLTS sent the market to the upside. And the reason being is that they can't, at the moment, given the number of layoffs that they're having in the US, it's reaching a point where we're certainly heading into recession, and Powell is going to have to ease off the interest rate increasing brakes, and we're likely to see the metals continue to move higher because the dollar will move sharply lower. And if it gets through that 101 level, then it certainly will accelerate. So the dollar at the moment showing a bit of weakness, which is supporting the metals, and that was silver above the DP at the moment. Same for gold yesterday, managing to trade back above the $2,000 level, which is good to see. And in the 30-minute chart, you can see this here. It was a lot stronger than silver. It was actually moving up yesterday when silver wasn't. And then it spiked on the JOLTS numbers there, which you can see. And at the moment, just sitting at the close, it's already been up and had a look at yesterday's high. Needs to break through this, but it'll probably take until this evening before this actually happens. And finally, in the gold-silver ratio, this stuck in a bit of a sideways range, still at that 79.80 level that you can see there, between 79 and 80. So there we go. It's a matter of waiting to see what Powell says this evening, whether he increases rates by a quarter of 1% or he doesn't. It's going to be that simple. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.